Hi everybody, it's Wednesday, September 24th, 2025. Our episode starts with a headline, Double A credit spreads tightest seen for 27 years. This isn't the first time I've brought up this chart from the Fred Double A corporate spread. In other words, how much more do Double A corporations need to pay above the treasury rate? Right now, we've been basically around 0.41 and 0.42. This tightness of credit between AA bonds and U.S. Treasuries has never ever been this tight since 1997. We have to go back that far to see that. One reason I bring this chart up is because of an article coming out from Financial Times worrying about debt investors raising an alarm over lending standards when companies like Tricolor and First Brands are going bankrupt. It's a reminder that there's a reason why credit spreads are typically a little bit wider, because you're taking a higher risk. You can end up in a situation where you don't get the money back that you lent out. If bankruptcies like these continue, you can bet pretty strongly that credit spreads won't stay this tight as lenders begin to question the safety of their lending. Second headline of the day, mudslide copper spike. Copper went up 19 cents today. I guess we can get rid of that message. I will say this move is nothing compared to the fall it had experienced back at the end of July. But anyhow, this spike was because of a company called Freeport McMoran had a fatal mudslide, basically, and they're going to be producing less, and so that's going to put a squeeze on the supply side. So not because of expected stronger demand, but lower supply drove the price of copper up today. Moving on, community topics. How do you feel about the market right now? Bullish, bearish, or confused, like Robschild? Comment your ideas below. Coming up, not a whole lot of stuff coming up this week. We do have Thursday initial continued claims. I'll only bring it up at this point if it is notable. And but we'd have Friday the PCE data, which is going to tell us how the inflation thing is all going. And as always, don't forget about those tariff updates. Again, thank you for watching, liking, subscribing, commenting, and supporting my channel. No changes to the crystal ball ratings. And see my website in the description of the video to see my daily reminders, macro views, portfolio explained, and stock research center. Before we get into the charts, just to go over some of the economic data. New home sales came out stronger than previous and expected. We had a lot of, good economic news, really. Crude oil inventories going negative by 0.6 million instead of the expected 0.8 positive. So that's a good sign. However, didn't matter. The stock market continued to fall. We have 2 red candles in a row. I'm sort of wondering, is this going to be the rug pull beginning where stocks all of a sudden just out of left field start dropping more, or are the buy the dippers going to come in and send us yet higher? The VIX options pricing fear index still notably below any kind of fear level of 20, actually dropping interestingly today along with the stock market. Usually when the stock market goes down, the VIX goes up, so I found that pretty interesting. 10-year treasury note yield added some yield today. I was thinking that yesterday's red candle was looking like a blow off top kind of a thing, and we'd head straight back down. Instead, we gained 4 basis points back, so maybe we're going to be pausing here until PCE data comes out, and that may help determine where the 10-year is headed. Or if the stock market continues to fall apart and we get a rush into safety, maybe we will test the 4% level again. I still think there's a decent chance this week we will break to the downside below 4%, but that chance has been reduced after today's rise in yield. Bitcoin bounced today. Looks to me like a dead cat bounce, but we'll see. Crude oil rose and kissed that $65 a barrel line that has been acting as an important line for a long time now. It was only 2 days ago when I mentioned we were knocking on this door to the downside, and now we're knocking to the door on the upside. I don't know. Will we just stay in this range forever? That would actually be a good thing. Any kind of stability in oil and yields is generally a good thing in my book. If oil rises where we are right now with, jobs markets looking, on edge, that's really bad. But also if it goes down, it just means that we've already, beaten the dead horse enough where oil's like, oh yeah, no one actually is going to be buying oil now. And that's also a bad sign. Best case scenario, we go sideways. It's the only good move that crude oil can do in my book. Silver and gold, silver and gold. Everybody wants silver and gold, silver and gold. Taking a pause today, going sideways here. Don't know what to make of it. I have been convinced that gold will be dropping, and I've been wrong. And so at this point, I just gotta watch it and see what happens. Just wanted to let you guys know it's paused today. I also wanted to bring up the Russell 2000 IWM small caps dropping, looking like one of the weaker charts, actually looking like we may be actually rolling over here just from a chart standpoint. This is not looking like we're fighting to go higher. It looks like we've gotten exhausted and we're going to be pulling back. It looks like it wants to pull back further. Next chart, Nvidia, I wanted to bring up. And I think this company has a silly amount of growth packed into the price. I think investors buying Nvidia at this price are taking humongous risks with all the money that they're putting in it, because it can drop very far from here. This is, in my book, not a safe investment at this price level. However, the last 2 days make this look bullish. This green candle, these are called inside days. The entire candle inside of a previous green candle, all after already going up. This is actually a bullish move, telling me that Nvidia might have enough power to launch it even higher, but I really don't know. I have not brought this stock up maybe ever. LMT, this Lockheed Martin, basically they make military stuff. I wanted to bring up today, I keep track of this in case it ever gets crazily undervalued, and I've been noticing we've been just on such a strong bull run since the end of July here, and today we have a very scary looking topping tail on this chart, suggesting that Lockheed Martin, maybe this is insiders selling. I don't know what's going on here, but looks like this chart wants to head lower, for better or for worse. The only other thing I wanted to really talk about today a little bit was the Federal Reserve, the Jerome Powell, being stressed out about the fact that we are basically in a stagflationary environment, with inflation being higher than desired and the jobs market showing weakness here. And I think the stress that he's facing is knowing that, like I keep saying, that with the jobs market falling apart, I am still in the camp that the coming rate cuts will be weaker than what's necessary to keep the jobs market from spinning out of control to the downside. More than anything, I think he's stressed that he's going to be ending his term in a situation where everything is hitting the fan. This is not how he wanted to have his legacy as the Federal Reserve chair. The cause of this problem will likely be pointed at him for keeping things too loose for too long, contributing to too much inflation, and so here we are. Anyway, that's all for me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.